Hello everyone, welcome back to the channel. Today I will talk about a Chinese stock called Tencent, ticker symbol TCEHY. We'll understand their basics of their business, their financials and valuation, ARK Invest investing in this stock, and we'll also give you guys my thoughts on Chinese stocks for this year 2021. If you are new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. Also, have a completely free Discord group chat feeling for that is down in the description below. To start, Tencent is trading at $76.21 per share with a 52 weeks low of $40.80 and a 52 weeks high of $81.35 per share and has a market cap of $729.1 billion. This is an OTC stock. Tencent is a Chinese-based company that is very well diversified since they are the largest gaming company with Supercell, Epic Games, League of Legends, and many more. They also own one of the biggest communication and social media platforms called Weixin, WeChat, and more. They are into the media world with WeTV, in the fintech world that provides payment services to their customers such as Venmo, PayPal, or Cash App. They are in the cloud business, which is a high growth industry, and also in the utilities business with mobile browser and mobile security. One key factor of this company is that, as you saw, all of their services or products are online, meaning that when the pandemic hit, they did not get affected by it, which is excellent. As you can see, they have been having nice growth year over year since 2017. Since they are a growth company that works within a high growth industry, most of their revenue, 33% of it, comes from their gaming platform, then fintech and business services, then the social network, and lastly, online advertising. On Q3, they reported a revenue of $16.2 billion for the quarter, which was a growth of 24% year over year, and a net income for the quarter of $4.67 billion, which in my opinion is excellent since they have a profit margin of around 26.8%. Since obviously all their services and products are online, and that is way cheaper, less cost for the company. Not only has their company had a nice growth, but their stock as well. As you can see, the stock has been running up and up since years ago. Now, this dip or correction you see here in 2018, it happened because the company decided to announce that they were going to change or reorganize their business model to focus more on cloud business and advertising revenue instead of gaming, and got really criticized since people wanted gaming to be their main focus, even more since that is a high growth industry. On the other hand, they would have more competition. Yes, both the cloud and advertising industry are growing as well, but they will have more competition in that than in gaming. But we also have to take into consideration that $127 billion was wiped off the value of its shares as Chinese regulators clamped down on the video gaming industry, hitting one of the company's main businesses. And that is why you can see here that they had almost a flat year for 2018 in sales. Analysts are expecting them to report a revenue of around $18.9 to $20.9 billion for the fourth quarter and $72.9 billion for whole 2020. Then for 2021, they are expecting Tencent to continue its growth and report a revenue of $90.4 billion, which would be a revenue of around revenue growth of 24% year over year. Now, ARK Invest has been massively buying more and more shares of Tencent in the last month. You guys know I like to track what ARK buys or sells to be able to know what they are noticing right now and which industry is coming for the growth. Just yesterday, they bought 520,349 shares, which the stock was at around $76 per share, meaning that they invested over $39 million yesterday alone. Not only that, on Monday they bought 667,535 shares, and last Friday they bought a total of 641,292 shares, divided within their different ETFs between their ARKF, which is their FinTech Innovation ETF, ARKK, their ARK Innovation ETF, and the ARKW, their Next Generation Internet ETF. In just 3 days, they invested well over $130 million in this single stock. Now, let's talk about investing in Chinese companies. We all have seen how companies like Alibaba, NIO, Tencent, and JD have done throughout the years. NIO has performed excellent and Baba has dropped 28% from its peak. Obviously, that is looking very attractive, but why is this happening? Mainly because of Chinese regulations. I used to own BABA and it was an excellent investment. Bought it around $184.57 per share and kept adding on its way up, but decided to sell everything on October 8th of 2020 when the stock price was around $298 per share. So I sold for a profit because of the risk it involved investing in this type of company. Chinese companies can't control what the government wants to do, and we never know what the government will do against any of these companies. I'm from Venezuela and things here were kind of similar. If the government wants to mess around with a company, they will create regulations if needed, and that is a huge risk for a Chinese company. For example, let's read what happened with Tencent in 2018. At that moment, any publisher that wants to release a game in China needs to get the green light from authorities. Same with monetization, they would have to get approval. Online games account for over 30% of Tencent's total revenue. Then in March 2018, the Chinese government stopped approval for new video games, which made Tencent see their first quarter decline in net profit. Not only were games not being approved, but the sales of some titles were also banned. Also, we have another risk with Chinese companies. House passes a bill that could delist Chinese companies from U.S. stock exchange. This article mainly talks about why the U.S. might delist Chinese companies, and they said the bill aims to make a foreign companies let the Public Company Accounting Oversight Board oversee the auditing for their financial records if they want to raise money by selling stocks or bonds to the U.S. investors. All U.S. companies and most foreign companies already work with the PCAOB in this way, but Chinese ones do not. Basically, what this says is that if a Chinese company wants to stay listed in the U.S. stock exchange, they will need to comply with the U.S. GAAP rules, and China's accounting standards are not the same, and if they do not accept to comply with the U.S. rules, they could get delisted from the U.S. stock exchange. All this started because of what happened with Luckin Coffee. Luckin Coffee is a Chinese company that faked nearly half of its roughly $732 million in sales. And obviously these are risks that goes beyond the normal growth companies' risks. These are things that investors can't control and could lose a huge amount of money. Now, obviously, I'm not saying that Chinese companies are not excellent opportunities. They are. For example, Alibaba is down almost 30%. That is a huge buying opportunity in my opinion, for example, but you do have to take into consideration those risks I just mentioned with any Chinese company. Since first, we can't control Chinese regulations established by the government, and second, we can't know if the company is faking their sales or not, if they really are profitable or not, until the U.S. audits them. Those are my biggest concerns about Chinese companies for 2021. Now, on the other hand, in a perfect world, I think that Tencent is an excellent buy as well, since they are offering very nice growth opportunities. They are involved in a lot of industries that are growing really fast. The gaming industry, cloud business, advertising revenue business, social network, and they have still more room to expand if they want to. All of their businesses are online, and we know how beneficial that is, or that was during the pandemic, and that could give them more growth potential as well. I think that the gaming industry is not that popular right now, as I said in my Roblox video, but it is getting noticed more and more by hedge funds, by big hedge funds every day, and that will benefit companies like Tencent. I think it is a nice investment long term, but you need to have into consideration the risks you are taking when investing in Chinese companies. Again, I'm not saying they are a bad investment, I'm just saying that you have to take into consideration the regulation risk, the fake sale risk, and everything else. Would like to know what you guys think about all these Chinese regulations and problem with these Chinese companies. Have you invested in Tencent, Alibaba, or any other Chinese company? Let me know in the comment section below. Thank you everyone for watching. Please smash that like button and subscribe, since it really helps the channel out. Also consider joining my free Discord group. Site link for that is down in the description below, as well as 4 free stock with Webull and 1 free stock with Robinhood. Thank you and see you next time.